call of the day is Blackstone, upgraded to a buy at TD Cowen. The target to 230 from 149. They like the setup. A lot of people like the setup for alt managers, private equity firms, lower regulation, pent-up demand, deal nirvana, animal spirits. You pick however you want to describe it, but that's what people are talking about.
Yeah, what's not to like? I mean, both from the setup that you just described going into next year and also the longer-term secular perspective. I mean, just going into this year, first of all, we're seeing fundraising activity really start to stabilize. And across all the different strategies, we're on pace to $1.1 trillion in fundraising, which would bring us back almost to levels that we saw in 2020. Then you've got deal activity that's also on pace to actually eclipse what we saw last couple of years. And then you mentioned it, Scott, which is the capital market rebound that is really expected in 2025. And those holding periods are long. The LPs, the limited partners, are wanting to have some of the money back.
Yeah, they want realizations to happen, right? They've been waiting.
They have been waiting, and that can come in 2025. It's already started to happen this year. So that could really bode well for solid returns for these managers. But then longer term, Scott, I'm also looking at the assets under management today in alternatives, which is about $17 trillion today, which is forecast to go to $29 trillion by 2029. So that's a lot of growth across private equity, across venture, across private credit, and all of these managers, of course, are very well diversified and allocated to that.
Why the lack of ownership with you guys, just specifically because you're the one sitting here, of private equity? I mean, Apollo's going to the S&P on the 23rd, before the open on the 23rd. And these stocks are up a lot year to date, but they're up a ton since the election, right? New environment for private equity, new environment for M&A, and these stocks have ripped.
I did own Carlyle. I sold it obviously way too soon. I can't tell you, why I don't own them, because I've had the story. After all, I own Goldman for similar reasons.
Right. Do you think this story has a tremendous amount of legs still to go? Are we at the the earliest innings of a run for PE stocks?
Yes, I do think it does, because of the paradigm we're in this market, where it's all about momentum. It's about momentum of fundamentals, not valuation. And that's a general market call, so it will. And let's not forget, Mark Rowan was almost Treasury Secretary. So I got to believe, that I don't know how to say this, but that his deals that Apollo does will get a good look, or maybe not as good a look, from the FTC.
Well, but the whole point, though, is that it could be Apollo, it could be anything. It could be Ares, but whoever. So you could be able to do deals like you weren't able to do for the last 4 years.
That's correct. And you still have the disconnect between public markets and private markets. So the valuations in private markets have continued to be depressed. So, look, I wouldn't be as optimistic for PE if they were buying public companies, right? But with private companies and with rates coming down and with them having big balance sheets where their cost of capital is lower, it's panacea for them.
I do wonder if you would start to get more companies that have been staying private longer, right? The number of public companies has been steadily decreasing, in part because of the very service that private equity firms continue to grow. Private credit. If you're a private company, you don't need to access the public markets in a manner at which you used to, depend on them, because now you have alternative sources of cash and capital.
Yeah, but if you're private equity, you do need to monetize these things eventually. You do have to give money back to your LPs.
Even more reason why the environment looks rich.
I completely agree. By the way, I'm in BlackRock, and don't throw that to the side of the road when we're talking about private equity. They bought Global Infrastructure Partners. They're buying HPS. They bought Preqin. So they're clearly getting big in that space. Great company. I'm not taking anything away from Blackstone or Apollo. Scott, looks like you want to say something.
I do. I just want to look at the other kinds of banks. Weiss mentioned Goldman, which is ripped. It's up like 50-something% year to date, I think. Morgan Stanley got a downgrade today at Bank of America. It's the equal weight. They changed their price targets too. Bank of America's target goes to 55. Citi's goes to 104. Goldman to 736. There it is at just, let's say, 600.
They're all going to benefit.
That's the Wall Street view right now.
I mean, you've got lower interest rates. That's going to facilitate deal making. You've got lower volatility in the markets, notwithstanding, Steve, what you and I are thinking might happen in the first quarter or first half. You've got lower volatility. That's going to open up the IPO markets. You've got an administration coming in that's more friendly to mergers, so M&A activity is going to help. And whether this benefits the Blackstones and Apollos of the world, that's one way of playing it. But whether you're Citigroup, JP Morgan, Goldman Sachs, Morgan Stanley, you're going to benefit on the advisory side. Citigroup has said that a lot.
Don't we think, though, that a lot of that's already in the stocks? Like I said, if you go down the list, 55+% for Goldman, Citi's up 40, B of A's 37, and the other gains in the space look pretty similar to that.
Yeah, but if the trends continue for the duration of 2025, similar for the S&P, if earnings continue to go up, if activity continues to go up, that's what the stocks will ultimately trade to. And you also have to look at the other opportunity set, which is, it's all about cyclicals. It's participating in who can benefit from better lending activity, from steeper yield curves. So I think despite the valuations, which, by the way, are not all that stretch on a 10-year look back, I think the activity in financials continues.
Yeah, there's one other point that's really not discussed at all, is that with the aging of the population, right, the founder-owned business they still run, and I've seen this as we look at lots of privates, are more likely to step up and sell than they are to continue being private. So that's going to fuel private equity. Private equity is not really going after the leveraged companies because they're putting leverage on top of it themselves. So the ones that we talk about that have a high valuation, those aren't their targets. Their targets are ones that they can, leverage.
And by the way, just to add a quick point on valuations, they've clearly snapped back in the public markets. In the private markets, they have picked up as well. They're not at the trough that we saw in 2022.
Very selectively.
Perhaps selectively, but on the index basis, they're a little bit higher, but they're still below the valuations that are available in public markets.
All right.